So the American market stayed positive ahead of a potential shutdown by the U.S. government. My next guest says investors should ignore it. It's not a driver of market performance. Josh Sheluk joins us now, portfolio manager of Verecan Capital Management. Thanks for joining us today.
Thanks for having me.
Tough, of course, to ignore the headlines when they're screaming government shutdown, but you're saying investors should do just that. Can you expand on why?
Yeah, we've seen this come up multiple times over the past several years and longer term, actually. And every time it's kind of come and gone with much of a shrug from the markets. And if you look longer term, the average performance of stock markets, especially during these periods of times, is quite muted, certainly not negative, and in fact, and sometimes quite positive. So it's just another one of those things that you have to do your best to ignore as an investor. And actually, I told our investment committee last time we went through this, let's not talk about this at all anymore because it's just a lot of wasted breath.
Okay, so the U.S. Treasury yields didn't react to the possibility of a shutdown. So what are the bond markets watching in the U.S. and at home?
Yeah, I think it is the same thing that they're typically watching, and that's going to be your economic indicators and your inflation indicators, what the central banks are going to do in the future. And all of those things combined are rolling up into investor expectations priced into to bond yields. So I think in the U.S. and in Canada at this point, we're seeing weaker but still stable economic growth and predictions for interest rate cuts going out to the near future and into next year. And I think that's what's driving both the shorter term and the medium term and longer term yields at this point.
Okay, let's get to equities because I know you are looking at healthcare. It's one of the sectors you're favoring right now. First of all, what's under the umbrella of healthcare for you?
Well, healthcare covers a lot of things, and when you're looking at it as a sector, I think you want to be selective. You don't just want to broadly invest in the healthcare sector in general. But of course, the insurers are big in healthcare. That's something that we're not really focusing too much attention on at the moment. We just think there's a little bit too much policy uncertainty surrounding those at the moment. But also you can look at pharma or medical tech or medical services at the moment. So I think healthcare is interesting for a few reasons. I think there's a few gray clouds over healthcare at the moment, and that's sort of what's capturing our interest. You have a lot of policy uncertainty at the moment. There's uncertainty with tariffs as well. And you have still a COVID overhang. COVID actually pulled forward a lot of healthcare spending. And now what we're seeing several years later is that there's a bit of a trough in healthcare spending. So all of that has fed through to healthcare valuations, which right now are some of the most attractive valuations that we've seen over the last 10 to 15 years. So there's a lot to like there if you are willing to take a bit of a medium to long-term view.
Okay. Donald Trump, of course, announced a deal now with Pfizer pharma company, agreeing to reduce prices in the U.S. Is this a precedent-setting deal, you think?
Well, it seems like I'm a day late for my healthcare claim because some of the healthcare stocks are moving quite soundly today. It's hard to say whether it's precedent setting or not. The rhetoric is certainly that there's going to be a lot more of these deals unearthed or released in the near term. It's interesting because the gut reaction, or I think the feel from the headline, is that it's somewhat negative for Pfizer and for healthcare in general, but the stocks are reacting positively today. And I think that what that tells you is just that there's a lot of uncertainty around the space right now. And as soon as that uncertainty starts to clear, whether it's resoundingly positive or not, you're going to see some positive moves from the stock. So I think this reflects, again, the valuation that I was talking about earlier, and the fact that valuations are so depressed. Anything positive, as long as it unclears or clears rather some of those gray clouds that I was talking about, you could see some positive moves for the companies.
Yeah, Pfizer up as well as Eli Lilly. What do you think it means, though, for the bottom lines of some of these big pharmaceutical companies?
Yeah, when you hear Pfizer saying that they're going to be offering 50% discounts, I think it's really premature to try to guess what that's going to do to any bottom lines. So maybe there's going to have there will be a modest impact negatively to earnings per share, perhaps. But again, if you clear some of these clouds and valuations can return to a somewhat normal level, a modest hit to earnings might not be a detriment or severely limiting for the stock performance.
We've talked a lot about AI, of course, in the last sort of year and a half. Is this a longer term trend, or do you think there's another market leader coming in the next year?
Well, I think AI in general is a very long-term trend. Actually, I think it echoes the same thing as the internet and some other real technological revolutions that have occurred in the past. I think the bigger question is, what are the leaders? Are the leaders of today in this AI race going to be the leaders of tomorrow? And I think that that part is very hard to know. Certainly, if you look back historically, the leaders of the past 10 years are very rarely the leaders of the next 10 years. Now, that trend has kind of been bucked over the last little while with some of these technology companies, and some of the leaders from the last 10 years do seem to be leading the AI race at the moment. But I think that we're starting to see the AI thing broaden out a little bit, and the performance of some smaller, newer players to the industry are starting to get some real run, especially in their stock prices. So there's a lot to be determined still on the AI topic, but I think what I would leave investors with is it just pays to be a little bit cautious with some of the current leaders and to remain diversified and remain open-minded, because we're not exactly sure who the leaders of tomorrow are going to be.
All right, we will leave it there. I appreciate you joining us. Josh Sheluk is portfolio manager at Verecan Capital Management.